Hey guys, it's Calvin here. Let's go over my trades for the week. Okay, guys, some of you know I took a pretty big loss on Apple this week on the 535 put spread. No excuse, made plenty of mistakes, and I'd like to go over them today to help me realize and make sure I don't do the same mistakes ever again. Okay, guys, off this measured move, guys, I actually got a target, and I drew the target incorrectly, guys, pretty much, guys. If you draw it off a bigger pattern, you actually get the measured move of today's low. I actually drew the target off a smaller pivot and actually got the measured move of roughly 556. And that's why on Thursday I thought we'd get some inside bar consolidation, guys, off this measured move, and we didn't get that. The leg down was not finished, and we finished that leg down on Thursday, and we got a nice 3-day move, which is a time count, and now we're getting some sideways action, guys, that I anticipated on Thursday, but didn't happen. Now we're getting it today. Nice pause candle. Unfortunately, if I just held that trade, it would have been a winner, and that's really, really unfortunate, guys. It actually went about $1 and change below my strike price and actually busted up higher the rest of the day. I actually was contemplating very heavily if I should just re-enter that position and recapture the entire loss, guys. I could have made all my money back if I just re-entered off this low, guys. And the stop out was very simple. The stop out would have been the low of the day. So that would have been a very good risk reward. Unfortunately, I did not have the kahunas to get back in. This was your first sign, guys. Actually, off this move, I got in on the 530, guys. But by that time, the premium had deflated, so I recaptured per very small gain, guys. I got in pretty much right here on the break of the 50 moving average here, and I also did the 15 bullpen spread. So I rolled some contracts down, guys, but still nonetheless a pretty big loss, guys. I gained about 2% back to my account after that big loss on Thursday. I tried to stop out on Thursday. Actually, I tried to stop out as soon as Wednesday. At the close right here, guys. This is Wednesday's close. Tried to get out here, guys. Could not get filled. I had another opportunity on Thursday morning on a nice little pop. Could have got out break even here, guys. The intraday chart was looking bad too, guys. That's why you just ignore emotion, guys. Just ignore it and just get out if the chart's telling you so. Because actually, it started looking pretty decent. Let me see where was the Wednesday morning. Wednesday morning was looking pretty decent, actually. It was consolidating here, it looked like. It made a nice little pop, but it caught resistance, guys, on a 20 moving average, guys, declining. And when I saw this, we start chopping below these 2 moving averages. You know what? I know this is going down, guys. This is bearish consolidation, downtrend on a 10-minute chart. We're getting dominant charts on an hour chart. It just started looking ugly, guys. And I should have just trimmed my loss right here, guys. Off this, first few candles started looking good. Started consolidating here. It looked like the 10 moving average was starting to flatten out a little bit, but went right into a resistance, a heavily declining 20. That would have been a great spot to exit, guys. And as I saw this, it kept making inside bar pattern, bearish flag, bearish patterns with these declining moving averages. They started spacing apart here, guys, these moving averages, and I was like, you know what, this is looking really ugly. And the next day we got more follow through. Just absolutely a nightmare trade, guys. But there's always a lesson learned when you make mistakes, guys. There's always a silver lining, guys. And I definitely learned a great lesson on this trade, guys. I was anticipating sideways bars on this Thursday bar, but did not get it. Wednesday, this red bar, did not get it. We actually finished the leg down in the next day, and now we're getting the sideways action, guys. You might think so I drew the measured move incorrectly, guys. My entry was terrible. There was no reason to get in on this, guys. This is a bearish flag below the 200-day, so this was a breakdown, guys. There was no reason to get in this trade. Obviously, trading ahead of the election was a terrible idea as well, and but there's no way of. In hindsight, it's easy to say that, but it could have been definitely avoided, guys. It was just absolutely careless this week. No excuse at all. So the low of the day today and yesterday was roughly lined up with this big green bar, guys. Whenever you get these green bars, guys, the low is very, very important, guys, and that's exactly where we found support today, guys. Look at this. You line it up. Lines up pretty much to the penny, pretty much like 30 pennies away from the low, guys. So that was absolutely fantastic. Everybody's waiting for this level, guys, right? And it never actually really gets there sometimes. So it actually went into this support and bounce. So this is a nice support right here, guys, the low of this green bar. Another reason why I did the trade was the 50-week moving average. I thought this would hold off a weekly uptrend. with the Bollinger Band as well. We did recapture the Bollinger Band, but the reason why this didn't hold was there wasn't enough secondary factors. I mean, we do have a nice solid uptrend, right? And it's never been hit 50-week moving average, but you need another secondary factor that lines up directly, specifically with the 50-week. That will add that much more strength to it. But by itself, it's not as strong, guys. You'd like to see a pivot, like a retrace, something in that nature, all lined up at that particular spot. But unfortunately, we did not get it, guys. That's why we flushed through. You always want to line it up with multiple factors, guys. Maybe if it was lined up with 550 with this pivot here, guys, maybe 3 weeks ago, that would have been a good spot if it dropped right into it, but now it's kind of minor without secondary factors, guys. So that is the trade on Apple, guys. Very unfortunate, guys. I actually re-entered some, like I said, off the break of the 50 moving average here. Covered right when this started looking weak after Obama got in the tele, and he was talking, and that's always bearish for the markets at the moment. Okay, so I got out on that trade for a nice profit, but nonetheless, a pretty ugly week for me, guys. Let's look at the SPY and just close up this video really fast, okay, guys. As you guys recall, I've been calling it out for a few days now, the measured move off the this pattern, this three-wave pattern, guys, was actually measured off this pivot right here, guys. Look at this. And it goes right into my level, which I called out for a few days now, guys. 50% retrace as well. What do you guys see here, guys? I'll give you guys a second. Do you guys see it? Upper gap fill, guys. I've been saying it for the past few videos, guys. Just go back and check the video out. These, the videos don't lie, guys. So this is gap fill candle here, guys. The upper portion of it is called upper gap fill, guys. Went right into that level, bounced right pretty much to the penny, and bounced nicely, and we sold off right when Obama got on the TV and was on his speech. So that's the reason why. And now we're actually looking pretty bearish, guys. If this was bullish, a fake out, like a fake out candle, you would see a nice reversal here and close above the 200-day, this trend line, and this 150-day as well, and maybe close above the 50% portion of this red candle. But we did not get that. Price was rejected off Obama's speech, and now we're trading below the 200-day again. If we get a bearish pattern, guys, here, like we did on Apple, we could see another leg down, okay, guys? So we have to be careful here, guys. We did trigger a head and shoulder pattern, which target is roughly the 132-ish area. So the charts are looking very weak at the moment, guys, okay? So that's definitely, you need to really look out for that, guys, okay? You have to be really cautious. It does not hurt to be in cash right now. I'm going to be very cautious next week. I'm hoping for a flush so I can sell some good premium will build up and sell some out of the money calls. I'm sorry, out of the money puts. Okay, guys, so that's the trades I did this week, guys. Hopefully you guys traded it well. I hope you guys did better than me. Hope you guys did great. Hope you guys have a good one. I will talk to you guys next time.